What's up guys, it is Sam here from Market Movers, and today I just wanted to talk about what is going on in the news at the moment. And it's been going all year long. You've probably heard it in the news on different types of stock market channels, or just basically floating around all around the place, and that is the topic of interest rates. So interest rates are increasing all over the world, basically to combat inflation, to tighten the money supply. So basically what I want to do is just basically explain what this means for the average person, how it affects you and what you're buying, your access to different types of capital, and what it can mean for your bank accounts and the interest that you could earn there. So it's going to do a little bit of a brief overview on what all of that stuff kind of means and what it's all about basically. So guys, without further ado, let's get straight into the video. So guys, the topic of interest rates has been around all year, and it's been affecting the markets dramatically. But I just want to explain how it really does affect the ordinary person, ordinary consumer, and what it does mean for you. So first of all, it is extremely important to understand what interest rates actually are. So essentially interest rates are for the cost of borrowing money from the central bank. Being in Europe, it would be the ECB, or in America, you've probably heard of it's the federal government, or the Fed, they're called, but basically the federal government's bank. And when interest rates goes up, it becomes more and more expensive to borrow money. So that may be through your credit card, a mortgage, or just a personal loan. So what it is the federal government would say create the money that they would give to banks, like your local bank, like Bank of Ireland, and then they would then loan it out to the consumer. And where Bank of Ireland then make their money is they profit off the rate. So if, say, the ECB, I think it's around the 3% mark at the moment, they'll charge you 6% on interest on that. So they're basically making 3% on that loan. So that's how the banks will make money. And also they do increase from credit cards and stuff as well once the money supply does become tighter. But you may be thinking look, why does this actually matter to me? I don't borrow any money. But the reality is that the interest rates can have a ripple effect across many different aspects of people's lives, even if we don't borrow the money directly. So for example, let's say you have a mortgage on your home. If the interest rates go up, your monthly mortgage payments could also increase if you're not on a fixed rate. So this is, you may see it in the news, where people are now saying their mortgage payments every month are going up and up and up. And look, that's just something that's going to happen with this. And this can put more of a strain on your monthly budget as well, just so you have less money, free money to spend. So also, if you are a business owner, you might need to borrow money to finance your operations. And if interest rates are high, it becomes more difficult and more expensive for you to get a loan, and this could impact your profitability. And there you're more likely not to employ more staff. You're not likely to take any sort of risky endeavors or cut back on projects because your profitability has been hit by the higher cost of borrowing money. So that's how it does affect people. Whether you're looking for a job or you're unemployed, if the market becomes tight, where people are looking to lay off people, you could run into difficulties that way. But it's just not borrowing that can be affected by rising interest rates. Many people who do have saving accounts or investments that are also then tied to interest rates as well. When interest rates go up, the return on investments may also increase. However, on the flip side is that inflation can also go up when interest rates increase, which can erode the value of your savings. So what you're seeing at the moment is we have high inflation, and now we're getting high interest rates as well. So you're kind of getting hit by double-sided things here. But yeah, look, that's kind of what we're all seeing. We're understanding that when the interest rates are increasing, the money supply is becoming tighter, and also while we have inflation, it's getting more expensive, and plus the money supply is tighter, so that can actually really, really hurt ordinary households. But on the flip side is if you have savings accounts in a bank and stuff, when interest rates increase, they're actually more likely to pay you more of an interest rather than what you've been used to seeing over the last couple of years or so, where you basically just get a 0.25% payment on your cash. So you may hear your parents saying that when they were growing up in the 80s and stuff, they used to get 6 to 10% of a return basically just for holding cash in the bank because interest rates were so much higher. So look, it's always interesting to take that into account as well, that you will start to earn a return if interest rates do continue to increase and they can't get inflation under control. So look, basically, as you can see from this, like it does have, interest rates can have a wide impacting relationship on the ordinary person, and it's important to always kind of stay informed of what's happening with interest rates and how you can prepare your own personal finances to be ready for this. So if you're looking to go for a mortgage, a personal loan, or you're starting up a business, interest rates are massively something that you do need to look at, to try to understand why the cost of capital is getting more expensive. And yeah, so look, that's just a bit about what the interest rate increases is all about, how it is affecting the ordinary consumer and how it's affecting businesses just on a small overview level. And look, I hope you guys had a great Christmas and a great new year, and I hope you learned from this and something that you might learn to pick up on what you're going to be seeing in the future. And look, I hope you understand the relationship now between interest rates and the average person and how it does affect you as well as just big business and the employment markets and also the stock markets. Another thing that they do generally touch on, like if you're investing in stocks, high interest rates environments, generally they do perform poorly, especially higher risk stocks. You're seeing stocks like Tesla down like 60% last year in 2022. It's continuing now as well into 2023, just on the first day as well. So look, while this environment maintains, like the stock returns will be minimal, but look, it's something that if you're continually buying into stocks, you have nothing to be afraid of. So guys, look, without further ado, I'll end the video here, and look, I will see you in the next one. Thanks a lot.